Good morning. We'll begin with departmental accounts. Before we start with the departmental accounts, one of the very easiest chapter in your accounting paper is which one? Departmental accounts. Okay, compared to the other chapters, we are just going to prepare final accounts. We are just going to prepare final accounts. What is a final account? Preparing which account? A trading P&L account. Preparing a trading profit and which account? Loss account. What will come in the trading account? Opening stock, purchases, direct expenses like carriage inwards, all those taxes on purchases, all those things. You will get which one? Gross profit. Then on the credit side, you will record which one? Sales income. Then you will record which one? Closing stock. And of course, this is part of which account? Trading account. Then we will continue with P&L account by recording gross profit, by recording sundry incomes, which may be like interest, dividend received, discount received, all those things. We will charge all the indirect expenses. And we will find out which one? Net profit, and with that we will prepare what? Balance sheet. Okay. This is what we are going to do in which accounts? Departmental accounts. Then in what way the departmental account is going to be different? Or who is going to prepare the departmental accounts? Simple. If I am dealing with two or more products, if I am dealing with two or more product line, okay, or if I am dealing with two or more services, then I will go for departmental accounts. I will go for departmental accounts. Okay, let us assume you are running a departmental store. You are running a departmental store which is having three major divisions. One is a provision. Provision items means like regular rice, wheat, masala powders, all those things. Second area is medicines. Third area is cosmetics. Okay, so we've got how many sections? Three sections. Now, would you like to know the profit overall or separately? I want to know the profit earned by which division? The general provision store division, then medicines, that is medical shop, then which one? Cosmetics, like that I want to find out. So simple, I will prepare in a columnar format. I will prepare in a columnar format. Now, trading account, normal trading account will have how many columns? One column. This departmental trading account, this is called as which one? Departmental trading profit and loss account. It will have how many columns? Multiple columns, depending upon number of products that you run. Okay, in this example, there are three columns on debit side and three columns on which side? Credit side. You record the opening stock of the respective item, purchases of the respective items, direct expense of the respective items, then which one? Sales and closing stock. You will get which one? Gross profit. Gross profit. Then you will charge all the indirect expenses and you will get which one? Net profit. Okay, what is there to learn in this? What is there to learn this? Normal final accounts, single column. Departmental accounts, multiple column. The same departmental accounts can be prepared for a multi-specialty hospital also. How many departments you will have? Front layout layer only. Department of cardiology, neurology, allergy, and the mari. Okay, so many departments. Every department is a cost center as well as a profit center for them. So they will prepare columnar account, Department of cardiology, neurology, allergy, and the mari. Okay, they will prepare what? A columnar trading P&L account. They will prepare to ascertain what? What is the profit or loss from different sections? What is the profit or loss from different sections? Which segment is making good profit? Which segment is making low profit? Which segment is running at a loss? All those things they will ascertain. Same way in a departmental store also you will do. Okay, let us assume you are manufacturing two different types of electronic goods. One is air conditioner, another one is fans. Okay, now for air conditioners you will have a column and fans you will have what? Another column where you will record all these things, where you will record all these things like that. Wherever you manufacture two or more product or render two or more services, then you prepare which account? Departmental trading P&L account. Now what is there to learn in extra? Okay, let us assume I am running a section of manufacturing and selling the product. One is called as ginning factory. What is a ginning factory? They get the cotton from the farmers, they convert into pure cotton. They convert into pure cotton. Second is I run a spinning mill where cotton will be converted into thread, yarn. Then I also run a weaving factory. I also run a weaving factory where yarn will be converted into cloth. Now, ginning, spinning, and weaving, these are the three sections, like a process industry. Now, ginning factory, the cotton will be sold to the external customer. It will be sold to the external customer as well as it will be internally transferred. How? Cotton is required for spinning. Cotton is required for spinning. So, the requirement for spinning will be taken for which division? Ginning division. Ginning division will transfer the cotton to spinning division. Spinning division will transfer the yarn to which division? Weaving division. Weaving division will sell the cloth. Weaving division will sell the cloth. Now my question is whether all the cotton will be only transferred. I manufacture cotton. I am in a ginning division in charge. Will I transfer all the cotton manufactured to spinning? Now I will sell to my external customers. That is called as buy sales. As well as I will do which one? Internal transfer. I will do which one? Internal transfer. Same way, yarn. I will sell in the external market as well as what? I will sell, send it to which one? Weaving division. Now, how to record internal transfer? How to record which one? External sales, we will put what? By sales. By sales to external customer by different department, we will put. How to record internal transfer? Opening stock purchase different departments. Transfer I have to record. For example, ginning division transfers 10 lakh worth of cotton to spinning. Spinning division transfers 15 lakhs worth of yarn to weaving. And the mari. Simple accounting rule. Debit the receiver, credit the giver. Debit the receiver, credit the giver. For example, if spinning is transferring, we will put what? We will put which one? By transfer. By transfer, in which column you will record? Credit the giver, spinning. To transfer. Who is receiving? Weaving is receiving. Now we will debit what? Weaving. Either personal account rule you can apply, debit credit the giver, debit the receiver rule you can apply, or nominal account rule also you can apply. For the receiver it is like expense. I get the goods, it is like expense. Debit all expenses and losses. For the person who is transferring, it is like income. You can credit the income. So how to record interdepartmental transfers? Credit the giver and which one? Debit the receiver. This will be recorded in which account? Trading P&L account. This will be recorded in which account? Trading P&L account. So this is the difference in learning. This is the first difference in learning. Clear how to deal with interdepartmental transfers? Debit the receiver and credit the what? Giver. In costing you would have learned this. The reason for taking up this chapter is in costing you would have learned direct expenses and indirect expenses. What do you mean by direct expenses? Prime cost direct material, direct labor, and which one? Direct expenses. Overhead chapter also you have seen. Direct material, direct labor, and direct expenses. They are charged to the department concerned. They are charged to the maybe production department, service department. Overhead chapter, production department, service department. You would have apportioned expenses. Service department to production department, reciprocal, non-reciprocal. Okay, I thought you remember it. No issues. Okay, coming back. Direct expenses can be directly charged. For example, direct expenses like wages paid for the workers in ginning, spinning, and weaving can be directly charged. But what about indirect expenses? What do you mean by indirect expenses? Common expenses. Common expenses. Maybe the overhead chapter rent. Rent based on. Can you charge the rent directly? Okay, let us go back to the old example of departmental store. I give an example of which one? Provisions, medicines, and which one? Cosmetics. Let's assume you are running a departmental store with all these things. Opening stock is separately identifiable. Purchase is a separate expenses is identifiable. Direct expenses like wages. For example, the worker involved in provision, can you employ in medicines? provision section work பண்றவன தூக்கி medical section ஓட முடியுமா? No. அதே மாதிரி medical staff வந்து can you go for provision section? No. So direct expenses, wages will be direct expenses. It will be directly allocated. Costing you would have used the word. Direct expenses are chargeable expenses. Traceable cost. It will be directly charged to the department concerned. You will use the word allocation. You will use the word allocation. What about indirect expenses? As somebody has said, Akia, in the live online, indirect expenses. For example, can you identify rent, security expenses, EB charges, maintenance charges separately, or it is spent common? It is spent common. So indirect expenses you have to apportion. Indirect expenses you have to apportion. The best word that is used in costing is apportion. Direct expenses, allocation. Allocation means it is charged to the department concerned, cost center concerned. Indirect expenses you will what? Apportion. On what basis? Refer to the overhead chapter. Refer to the overhead chapter. Rent based on area occupied. Lighting and heating based on number of light points. Number of light points. Okay, okay, it's okay. Number of light points. Adhe mari. Indirect wages will be allocated based on direct wages. Indirect wages will be allocated based on what? Direct wages. Depreciation will be allocated based on value of asset, value of the asset and the money. So indirect expenses will be apportioned on a suitable basis so that you get net profit of different departments. You get the different departments net profit. Okay, all these things are given in a printed note. Go through that. This method of accounting is followed when an entity deals with what? Two or more products or services. You are having two or more different types of business segment. In order to ascertain profit or loss, a columnar trading P&L account is prepared. Sir, what is a columnar trading P&L account? This is an example. We prepare in which format? A columnar format we prepare. Then read further. What is given? Direct expenses are allocated to the department concerned. Direct expenses are allocated to the department concerned. Example of direct expenses: purchase of material, wages, carriage inwards, any other thing like tax on purchases. Those things can be directly charged. Indirect are which one? Common expenses are apportioned on an equitable ratio. Equitable ratio means most proper ratio. I have given you some of the allocation of expenses. Okay, based on sales. Based on sales, what are the expenses that can be apportioned? Advertisement, bad debts, commission paid, discount, delivery charges, and what? Carriage outwards. So all these expenses are influenced by sales. Otherwise, depending on, you can correlate. May not be direct, but you can relate. Clear? Advertisement, bad debts, commission, discount, delivery charges, like that. Based on area occupied, any expense on building. Any expense on building will be allocated based on what? Area occupied. What are the expense on building? Rent, insurance on building, then repairs and maintenance of which one? Building. Then, suppose if it is insurance, actually the title should come to the first page. Shift the title to the first page. Okay, not required, not required. Correct only, leave it. Stock value will be taken for insurance on which one? Stock. If the insurance is given for group insurance, like staff insurance, it will be based on what? Number of employees. If it is a building insurance, it will be based on what? Area. If it is on plant and machinery, it will be based on which value? Asset value. Electricity and lighting will be based on number of light points. Electricity or light points can be based on what? Number of light points. If light points are not available, you will use which area? Floor area. I'll come to that later. So simple. Insurance on what? If it is stock value. If it is for employees, number of employees. If it is for building, based on area. If it is for plant and machinery, based on which one? Asset value, like that you can apportion. Then, based on number of employees. Based on number of employees, what expenses? Staff welfare expenses, supervision expenses, timekeeping expenses, and which one? Refreshments. Based on sales, you can also allocate which one? General manager salary and which one? General expenses. Based on asset value, you can, of course, insurance on machine, capital asset, you can apportion. Based on number of light points, you can allocate which one? Electricity and which one? Lighting. If light points are not available, you can go by which area? Floor area. Based on capacity of machine. What is the next one? Based on which one? Capacity of machine, you can allocate which one? Power used for production. See, there are two words which are used. Electricity and power. What is the difference? Electricity is a word that is used in accounting for consumption other than production. For consumption other than production. So you can allocate based on area, light points and all. Power is the word that is used for which one? Power consumed for production. Because power include electricity charges, generators, diesel consumption charges. You will have electricity charges as well as what? Genset charges, etc. will be there. That's why it is based on capacity of machine. It is based on which one? Capacity of machine. Then depreciation, repairs and renewals on building will be based on floor area. Other assets, it will be based on what? Asset value. Sir, in the exam question, they have not given any basis. The exam question, they have not given any basis means allocate based on which one? Sir, they have given rent, they have given commission, they have given insurance, but we are not given data about floor area. We are not given data about light points. What to do? Allocate it based on which one? Sales. So if no basis is available, go by which basis? Sales basis. So this is nothing but a repetition of your overhead chapter. All these things you would have done it in overhead chapter. Same thing we are going to do here also. So once again, let me repeat. So direct expenses you charge, indirect expenses are apportioned on a suitable basis. Then interdepartmental transfers. This also I discussed. Transferring department trading account will be credited. Why? Credit the giver. It is like income for which department? Transferring department. For transferring department, it is like income. At which price? Transfer price. Receiving department trading account will be debited at what price? Transfer price, because for the receiving department, for you it is like expense. Debit the expenses or debit the receiver in the money. Then other three bullet points, I will come to that later. If goods are transferred above cost, loaded price, what to do? Let me not to add load now, I will come to that later. Okay, I will come to the general P&L account, etc. later. As of now, no, don't copy this also. This we know. How to prepare trading account, we know how to prepare trading account. Only thing is that we are going to prepare in which format? A columnar format. Okay, direct expenses you directly charge, indirect expenses you apportion on a suitable basis. Wait. After preparing a trading P&L account, we are going to prepare which one? Balance sheet, that will be a single column one. Balance sheet will not be in product wise, balance sheet will be what? A single column balance sheet, particulars amount, that's all. Okay, we will do a problem to apply this concept. Go to question number 1. Read question number 1. Suman Limited is a departmental store having how many departments? 3 departments. The managers are entitled to how much? 10% of net profit of the department besides their annual salary of 3,000 each. The information regarding departments are given. What is given to us? Read this. 3 departments, XYZ. The manager of each department is entitled to a commission of how much? 10% of net profit besides their annual salary of how much? 3,000 each. 3 departments information is given. Opening stock, purchases, debtors at the end, then sales, closing stock, floor space is given to us, then number of employees are given to us as a basis. Then we are given indirect expenses. Carriage inwards in a basis, purchases. Carriage outwards, turnover. Salary based on number of employees put on. Then advertisement based on turnover. Discount allowed based on what? Turnover. Discount received based on discount received. It will be based on which one? Purchases. Rent, rates and taxes based on area occupied. Depreciation, they ask you to apportion what? Equally, then they have given you general item. They have given you what? General item. You are required to prepare a trading P&L account for the ended 30th June 2016. After providing what? Provision for bad debts 5%. We are given closing balance of debtors. Yes. What is the closing balance of debtors? So we are given different basis of apportionment. Provision for bad debts, how much is given? 5%. 5% கொடுத்திருக்கோம். Now in this problem, is there any interdepartmental transfer? In this problem, is there any interdepartmental transfer? X transferring to Y, Y transferring to Z and the mari? Any interdepartmental transfer? No interdepartmental transfer is given. It's a plain simple problem where we have to prepare what? A trading P&L account and what? A balance sheet. There is a salary given which we have to provide for. There is a salary given which we have to provide for. Start first. Which account?
Trading.
Start trading P&L account. What are the departments? Start. No transfer. Tell me the opening stock value. 72,000, 48,000, 40,000. 72,000.
48,000.
Purchases. 2,64,000. 1,76,000. And what? 88,000. Then sales, how much is given? 3,60,000, 2,70,000 and 1,80,000. Two purchases. Then any direct expenses available? Carriage inwards. Based on which ratio? Purchase ratio you apportion. Apportion the carriage based on purchase ratio. This 6,000 you apportion it based on which ratio? This 264 is to 176 is to 88 ratio. Apportion based on purchases. Apportion based on purchases. How much you get? 3,000, 2,000, 1,000. Any other expenses that will come in the trading account? Then closing stock. What is the closing stock value? 35,000 and 42,000. Tally this, you will get which one? Gross profit. Continue the P&L account and close the P&L account. Let me see. Indirect expenses are to be apportioned. The ratio or basis of apportionment is already given in the problem. Right. What are the indirect expenses you have to charge? Carriage outwards based on sales. based on sales apportionment, how much you get? That is 36 is to 27 is to 18 ratio. I go 3 is to 2 is to 1 na? Illa. Sales or ratio paranga ratio 36 is to 27 is to 18 na? 4 is to 3 is to 2 ah? It will come in 4 is to 3 is to 2 ratio. Hello, Anish. 1000, 1500, 1000. Carriage outwards sales ratio. Then which expense next? Salaries based on number of employees. Salaries based on number of employees your portion. 25 is to 20 is to 15. 25 is to 20 is to 15. Including manager salary. Oh, salary includes which one? Manager salary. Okay, correct. What is the manager salary? 3,000 for each manager is included. So what you have to do?
Less than.
Wait. This salary includes manager salary. What is the salary? 81,000. This includes what? Manager salary. So from the salary, what is the total salary? 81,000. In that manager salary, 3 managers into 3, 9,000 irko. Balance, what is the balance? 72,000. This will be apportioned based on what? Number of employees. This will be equal. This will be equal proportion. 3,000, 3,000, 3,000 like that. So salaries, that 72,000. First you take 72,000 apportion based on number of employees. 72,000 based on number of employees. What is the number of employees?
60 total.
60 employees total. So 25 is to 20 is to 15. 30,000. 20. 24,000 and 18,000. This is 2 salaries. What is the next one? Manager salary, that we know how much? 3,000, 3,000. Then, what is the next one? To advertisement. Advertisement based on turnover. 36, 27, 18. 4 is to 3 is to 2 ratio. Advertisement based on sales. How much? Advertisement 5,400 based on turnover. 2,400, 1,800. Then discount allowed. Discount allowed based on turnover. Same. The 4 is to 3 is to 2 ratio. चलो अच्छे डिस्काउंट लो 1,000 then 1,750 then what is the next expense? Discount received. By discount received based on purchases. In the purchases 264, 176, 88,000. Hello, Anish. 900, 600 and 300 based on purchases your portion. Then rent, rates and taxes. Floor space. Floor space is given separate. The 3,000, 2,500, 2,000 based on floor space. 3,000, 2,500 and 2,000 from What is the next one? Depreciation equal. Equal 1500 equal, no? So 500, 500 and 500, not over. To provision for bad debts. Last line it is given, how much percentage? 5% on the departmental debtors. Provision for bad debt, 5% on the departmental debtors value. Do we know debtors value separate? Yes. Debtors at the end given, this 15,000, 10,000, 10,000 into how much percentage? 5%. Work out and tell me. 750, 500, 500, 500. This is provision for bad debts. It's not over. Is it over? No. Look at the first two lines of the problem. The manager is entitled to a commission of how much? 10% of net profit besides their annual salary. Which means you have to work out the net profit roughly and work out the commission. So, to commission, simple, add up the credits. Minus the debits. The whole multiplied with eவ்வளவு percentage? 10%. Here, total of credits minus total of debits so far into 10%. Like that you work out for others. Then final net profit will come. Otherwise, net profit after commission. Do you understand the commission part? Commission part is credits minus all the expenses so far into 10%. Into 10%. Any doubt in any of the parts? Carriage apportioned based on purchases, carriage outwards based on sales, it's specified. Salary out of 91,000, 9,000 is manager's salary. Remaining 72,000 we apportioned based on which one? Based on sale, based on number of employees. Advertisement based on turnover, discount based on turnover, rent based on floor area, depreciation equally apportioned. Provision for bad debts, respective debtors into how much percentage? 5%. Commission. Commission is the balancing figure into how much percentage? 10%. The final net profit we get. Next, you can prepare the balance sheet. Okay, not in columnar format. It's going to be liability. All the profits will be added with capital. All the profits will be added with what? Capital. Start. Which one you are going to do? Balance sheet. Start. Liabilities and such same like a sole trader's balance sheet. Liabilities amount, assets amount. That's why equal. Depreciation is specified to us, clearly given to us. Here. Depreciation on furniture 1500, apportion on what ratio? Equal ratio. When it is directed to us, go with that. Try to prepare the balance sheet. You just tell me the answer, then I will proceed. Tally acha illanu solunga, apparama proceed. Balance sheet, wait பண்ணுங்க. Share capital, what is the share capital given? 3 lakhs. Reserves and surplus, we'll take it as a balancing figure. We'll take it as which one? A balancing figure. Resource and surplus, we'll take it as a balancing figure. What are the other liabilities given? Bills payable, tell me. 12,100. Then sundry creditors, 27,000. Approved. Commission outstanding. The manager's commission put only here. Manager's commission, it is just calculated now, it is not paid. It is calculated while preparing the final accounts, it is not paid. Manager's commission outstanding will come. Manager's commission outstanding will come. Asset side, furniture less depreciation. Furniture less depreciation. After adjusting depreciation, how much you get? Furniture 13,500 minus depreciation. Depreciation 1,500. How much you get? 12,000. Huh? Then what is the next one? Goodwill. What is the goodwill given? Then debtors minus 5%. Debtors minus 5%. How much you get? 33 to add up all the debtors minus 5%. No problem. Cash in hand. Cash in hand over 1,750. Then cash at bank 1,62,000. Then not over. Closing stock. Closing stock of all the 3 departments add up. 1,60,000. Anything else that we left out?
Sir, bills receivable, sir.
Oh, bills receivable. 42. Take this as this one. A balancing figure will be taken as reserves and surplus. Because we are not given complete trial balance or whatever. So the balancing figure is reserves and surplus that includes undistributed profit. That includes which one? Undistributed profit. There is no other book. We cannot prepare cash collection from debtors etc. because opening date. And the current year profit, resource and surplus include current year profit, undistributed profit. Opening balance and general reserve P&L account plus current year profit after dividend, that is called as which one? Reserves and surplus. So what did we learn in this problem? What is extra learning we did in this problem? What is extra thing that we learned in this problem? Number one, direct expenses are directly charged. Indirect expenses are apportioned. Normal final accounts with one difference. What is the difference? Columnar format we prepare. Columnar format we prepare a trading P&L account. We prepare which one? Balance sheet. Okay.
So reserve and surplus net profit.
The resource and surplus net profit will be included. They would have paid dividend or detail. For example, net profit might be more. Net profit might be more. Why? Because they would have declared a dividend. We are not given details about it. It's a company's balance sheet. Okay, we are not given about how much of dividend is declared. Okay, all those information is not available to us. For sole trader only, you have to do what? Share capital plus net profit. For a company's balance sheet, the net profit undistributed will be shown under what? Reserves and surplus. Don't go to the second question, wait. Depreciation, see, the trial balance values are given. Trial balance values are subject to depreciation. Trial balance values are subject to depreciation. This 13,500 is a trial balance item. Depreciation is an adjustment. So 13,500 minus 500. It is not a sole trader one. It is not a sole trader one. It is for a company they have given. Actually, it's a company's balance sheet. You should follow, if it is asked in the examination, you should follow the schedule 3 format of company. Equity and liabilities. Share capital plus resource will come under what? Shareholders funds. Bills payable and creditors will come under which one? Current liabilities. And the trade payable over. Commission outstanding will come in what? Other current liability and the market. This will come under non-current asset. Debtors will be called as what? Trade receivable. Bills receivable and debtors will be called as trade receivable. Cash at bank will come as what? Cash and cash equivalent inventory and the money. Proper format exam. They ask for a company. Yes. The format has to be followed. It is a company's balance sheet. You must follow the format. Come to question number 5. I'll do the other questions. Come to question number 5. Read the question. What is given? Mehta is earning uniform rate of gross profit. Uniform rate of gross profit in all the division which he is handling. Okay, department A, B, C. Purchase kuduruka. What is the total cost of purchases? 6 lakhs. We are not given individual unit cost. Total cost kuduruka. Sales we are given each department separate. 20, 15, 10 and the money. Closing stock is given separately. Closing stock is given separately. Now, a prepared departmental trading P&L account in columnar format also show working gross profit percentage. Okay, there is no stock situation means opening stocks and closing stocks are purchased at the same rate. Cost of purchase in the last year, cost of purchase in the current year are the same. There is no inflation or change in the price. Department wise price and value. Value of which one? Opening and which one? Closing stock capital. Now, what is missing in the problem? Opening stock units are missing in the given. Units are given, but value is missing. Same way, purchases per line are we given separately? Purchases total cost is given to us. Purchase or total cost of 6 lakhs. Put together it is 6 lakhs. So unit cost is not available to us. For A or Z, are we given unit cost of purchase? No. Same way, unit cost of opening stock is not available. Closing stock, both units as well as the values is. How to find out? Closing stock units we can work out. Opening stock plus purchased units minus sold out units will give us closing stock. But the question is, we have to find out which one. Cost per unit. Cost per unit of A or Z. Try to work out and tell me the answer. Purchases order cost per unit I want for A or Z. Okay, the same cost per unit can be taken for opening stock valuation as well as closing stock valuation because we are given there is no stock situation. The first line itself gives a hint for the answer. Uniform rate of gross profit. So answer is not 12. Answer is not 12 per unit. Think. I want cost per unit for A or Z. The hint for us is they are making what? Same rate of GP. For example, A 30%, B also 30%, C also 30% in the market. Don't divide 6 lakhs by 50,000 pata 12 over. But A pata 20 minus 12, 8 rupees profit. B pata 15 minus 12, 3 rupees profit varum. C will be like 10 minus 12, 2 rupees loss will come. So, but the hint is they are making what? Uniform rate of gross profit. Think. Listen to it, 2 or 3 minutes. The first line is the hint. Rate, uniform rate of profit margin or GP margin. That is a hint for us, that is a constraint for us for solving this problem. Now, for finding out profit margin, we want two things. One is the sale value, another one is cost. Another one is which one? Cost. We need two things to find out which one? The profit margin. Now, we are given, I hope, sales, but the cost we are given which one? Look at this. We are given sales information. We do not know the cost of this. Now, for the purchased goods, is it possible to work out sale value? Yeah, 15,000 units into what is the selling price? 20. 20,000 into 15. 15,000 into 10. Is it possible to work out sale value for the purchased goods? Now, do we know the cost of the purchased goods? Using that, we can work out profit margin, Now, tell me. Sale value of purchased goods. Sale value, it's not sales actually, it is sale value of which one? Purchased goods. What are the departments? A or Z? A, euro units purchased? 15,000 into what is the selling price? 20 no, 3 lakhs. B or R, how much? 20,000 into 15, how much? 3 lakhs. Z, 15,000 into 10. 15,000 written 1,50,000. So what is the total sale value? 7,50,000 is sale value. What is the cost of purchase? 6 lakhs, which means, pay attention. If all the purchased goods are sold, we can make a profit of 1,50,000. We can make a profit of how much? 1,50,000. If you work out the profit margin, 1,50,000 on sales, 7,50,000 into 100, na evlo percentage varum? I hope 20% we can make. If all the goods are sold at a uniform profit, we can make a profit margin of how much? 20%. Now, wait. Selling price less profit will give me which one? Cost. We'll verify your answer also. How many departments are there? A or Z, clear? So selling price minus profit will give us cost. Department A or Z. Oh, sorry. Now what is the selling price of A? 20. 15, 10. What is the profit margin? 20%. Profit margin is 20% for all. 20% of 20 will be 4. 20% of 15 will be 3. 20% of 10 will be 2. Less panna cost over. What is the cost? 16, 12 and what? 8. We can verify your answer also. A or Z. Purchases verification panna. Purchases we can verify. How many units purchased? 15,000 units into cost. Now we worked out now how much? 16. 15,000 into 16, how much you get? 2,40,000 for R. Evlo units purchase pannirukkom? 20,000 units into what is the cost per unit? 12 na varum. 2,40,000 for Z. How many units we purchased? 15,000 units into what is the cost per unit? 8 over 1,20,000. Add and see. Add and see how much you get. 6 lakhs. Yes. It's a verification for us as well as a working note for us. Cost of purchases. Once again, I repeat, the hint given is which one? Uniform GP margin. For working out profit, we want cost element and sale element. We do not know the cost directly, but we can work out sale value of purchased goods. We can work out which one? Sale value which one? Purchased goods. So sale value of purchased goods is 7,50,000. Otherwise, if all the purchased goods are sold, we can sell it for 7,50,000. Cost is 6 lakhs. Now profit is 1,50,000. Margin is 20%. So selling price minus profit will give us which one? Cost element. Selling price minus profit minus which one? Profit will give us cost per unit. Cost per unit. So we verified our purchases also this much. Take up this and we will proceed. Openings. Yes, exactly. Opening stock units plus purchased units minus closing stock units minus sold out units will give us closing stock. Opening stock A எவ்வளவு இருக்கு? Plus purchased how many units for minus sold out. This will give us closing stock for A. For R, 5,000 plus purchased 20,000 minus sold out. Hello, 3,000. Is it? Plus minus so multiply this with cost. Cost per unit. You know 16, 12, 8. Multiply பண்ணா closing stock ஓட value வரும். Closing stock multiplied with cost will give us which one? Value. Cost per unit is 16, 12 and 8. Any doubt so far? Any doubt in this? So we worked out opening stock value, purchases separately we worked out. What we need to work out next? Sorry, closing stock value we worked out. Opening stock value we need to work out next. Opening stock, how many units given? 4,000, 5,000, 4,000. Value multiply with the same value. This 4,000 into 4,000 into how much? 16. No stock situation earlier. 4,000 into 16. So opening stock value also we worked out. What is the next one we need to work out? Shall I proceed? Shall I proceed? We have to find out the sales value. Sales value for A or Z. So opening stock plus purchase units minus sold out units will give us which one? Closing stock value. Closing stock units, that into multiply cost per unit, you get the value. Same way, opening stock into cost per unit, you get what? The value. Sales value for X, Y, Z. How many units are sold out? 16,000 units into what is the selling price? 20. For R, 22,000 into 15. For Z, 17,000 into 10. Much? 3,20,000, 3,30,000, 1,70,000. This is the sales value. Now we can prepare departmental trading account. To opening stock, we worked out the value. Opening stock value how much? The 64,000, 60,000 and what? 32,000. To purchases, we verified. For verification purpose also we work out. The value work out padirkom. What is purchases value? 2,40,000, 2,40,000 and 1,20,000. By sales also we worked out at the end. This 3,20,000, 3,30,000 and what? 1,70,000. No direct expenses. Closing stock. What is the closing stock value? 48,000, 36,000 and what? 16,000. That is your closing stock value. The tally panna gross profit varum balancing. You can verify your answer also. What is the profit margin that we worked out? I can check. GP is 20% on sales. Sales into 20% apply panna GP vandirukum. Yeah, 3,20,000, 3,30,000, 1,70,000. Each department profit into 20%. See, it's a very good problem. Just 6-line information, but makes us to think a lot and answer. This department accounts sambandhame illu. Shall we? Live online students, shall we proceed? Before we go for a next question from your material, let us take a small problem to understand which one? Interdepartmental transfer. To understand which one? Interdepartmental transfer. Let us take and solve, then let us go for a material question. Take up this. Start. Particulars and two columns. Particulars A, B. Particulars column, then which column? A column, then B column. Opening stock 20,000, 60,000. Purchases 5 lakhs, 8 lakhs. Sales 15 lakhs, 17 lakhs. Wages 3 lakhs and 2 lakhs. Closing stock 70,000, 1,30,000. During the year, Department B has transferred goods worth how much? 3 lakhs to Department A. Who transferred to whom? B transferred to A. At cost price. At what price? At cost. That means there is no profit element involved. That's all. Question is prepare departmental trading account P&L account. Prepare which account? Departmental trading P&L account. What are the departments? Simple to do. What is the sales? 17 lakhs. Opening stock? Don't wait, do it along with me. 20,000, 60,000. Purchases? Closing stock? 1,30,000. To wages. Wages are 3 lakhs and what? 2 lakhs. Now we have to record the transfer. We have to record the transfer. Credit the giver by transfer. Maybe by transfer to A in whose column? B's column. You credit. It's like a sales for them. Much? 3 lakhs. To transfer from B. In A's column, how much you will record? 3 lakhs. So tally this, you will get gross profit. Any doubt in this? Any doubt in recording the transfer? This already we learned. Credit the transferring department, debit the receiving department. Next, continue with which account? P&L account. By gross profit. By gross profit how much? 4,50,000 and 10,70,000. To general expenses, sundry expenses, in a ratio, sales ratio 15:7. 1,50,000, 1,70,000, 3,20,000 to net profit balancing. What is the net profit? 3 lakhs and what? 9 lakhs. Any doubt in this trading P&L? Since the goods are transferred at what price? The cost, no further adjustment is required. Because closing stock represent which price? Cost price. Okay, since the goods are transferred at cost, no further adjustment is required because the closing stock will be at what price? Cost price. Please remember, A and B, are they different organization or are they part of the same organization? They are part of the same organization. Pick up this. So what is extra learning in this question? How to record a transfer. Credit the giver and debit the receiver. And please note this also. I transferred the goods at cost to you. You received the goods from me at what? Cost. So your department stock will be at what price? Cost price. No further adjustment is required. No further adjustment is required. No need to prepare a separate account for transfer. Simple. When you good, are they part of external organization or the same organization? Same organization. So it will be recorded in which account? Trading account itself. No need to, because only external transaction we record. For example, I sell to my external customer, I will record a journal entry. And if I do any external purchase, I will record a journal entry. Here, department A and B are part of what? The same organization. So just it is recorded in which account? Which account? Trading account. Now we are going for the most important part in the departmental accounts. Start. Heading. If the goods are transferred, the goods are transferred at which price? Selling price. If the goods are transferred at selling price, now receiving department. Department's stock might include which one? Transferred goods. At what price? Selling price. Sir, let us assume I am transferring goods to you at selling price now. Your department stock might include which goods? The goods transferred from me also. You would have purchased from outside customers, outside suppliers, as well as what you transferred from me. So your stock will include what? The stock transferred from me at what price? At selling price now. At selling price now. Wait, pardon. Department A and B, are they separate organization or part of the same organization? Same organization. Now, can I show the stock at invoice price for balance sheet? Can I show my own stock? Department A or B, that is part of my own organization. Can I value the stock at selling price for balance sheet purpose? No. So here you would remove the profit. You would remove which one? Profit, that is called as loading. In accounts, the loading is otherwise called as which one? Profit. Okay, start. So receiving department stock might include transferred goods at what price? Selling price. the profit, it is otherwise called as loading, should be removed by preparing a general P&L account. A general P&L account. So if the goods are transferred at selling price, the receiving department stock might include transferred goods at what price? Selling price. The profit, that is loading, is removed by preparing which account? A general P&L account. Listen to it, then you can copy. General profit and loss account. It's a single column account. We'll transfer net profit. For example, X, department Y, department Z order. Net profit we'll bring it here. It's a single column account. Okay, we'll credit the net profit. We'll credit the net profit from which department? Various departments. It's a single column account. Wait. Opening stock appears in which side? Opening stock in the side or trading account, debit side. In accounting, when you want to remove something from the debit, how to do? Credit பண்ணுங்க. We'll put by stock reserve. By which reserve? Stock reserve. This is nothing but profit element in which stock? Transferred stock, or we can say transferred opening stock. Okay, then we'll put which one? To stock reserve. To stock reserve. This is for which one? Closing stock appears in the credit side. How to remove the profit? Debit side. Then to profit element in which one? Transferred which stock? Closing stock. Not all the stock. For example, stock purchased from outside supplier already would be at what price? Cost price. Only the transferred stock will be at what price? Invoice price. See, why are we removing the profit? Why are we removing the profit? Department A or B, X, Y or Z, they are different organization or part of the same organization. For example, X manufactures cost is 10,000, transferred to Y for 12,000 now. It is a profit which is made internally. So how can you record the stock at selling price? The objective of removing the stock reserve is to show the stock at what price? Cost price. So by stock reserve, this is a profit element in the opening stock. To stock reserve, this is a profit element in which stock? Closing stock. Then to net profit. To net profit. Wait பண்ணுங்க. இங்கே some expenses which are not connected to business activity, that will be charged in general P&L. What do you mean by expenses not connected to business activity? Directors' fees, legal charges, audit fees, or sometimes even, for example, some tax due was there, you didn't pay on time, some penalty was paid. Is it connected to our business operation? So those expenses which are not connected to any departmental activity, that will also will come in which account? General P&L account. Once again, I repeat. Why are we preparing general P&L account? What is the main objective? To remove which one? Stock. The profit in which one? Stock. Transferred stock. Okay, so by stock reserve, the profit element in which stock? Opening stock. To stock reserve, this is a profit element in which stock? Closing stock. If there is any expenses which is not connected to our departmental activity, even indirectly not connected to departmental activity, that will come in which account? General P&L account. Then final net profit will be transferred to balance sheet. Take up this. So this is which account? General P&L account. Take up this. So on the trading account, like opening stock, transfer, closing stock will be at what price? Invoice price will be respective invoice price will be. The profit element alone is removed in which account? General P&L account. Sir, why are you removing it here? Ange remove பண்ணிக்கலாமேன்னு கேட்கலாம். But there we want to ascertain real performance of department X and Y. X transferred goods to Y at a selling price. Why? Because otherwise their performance will be understated. I manufacture at cost. If I transfer at cost, debits are at cost, credit transfer is also at cost now. My performance will be what? Understated. So while preparing the trading account, you will record at what price? Invoice price. Opening stock, transfers, everything at invoice price. The profit element alone is removed on which one? By preparing a general P&L. Take it.
Still, it's not connected to business activity, general income.
It can be any general expenses.
Normal period.
Normal P&L account la general expense na indirect expenses. But for example, advertisement expense. I am running a showroom with 3 departments. I give advertisement. It is a general expense. Cleaning, maintenance expense. அந்த மாதிரி இருக்கிறதெல்லாம் indirect expenses அதை apportion பண்ணலாம். இங்க வரது வந்து அது business activity சம்பந்தம் இல்லாத expenses. For example, legal charges pay பண்ணிருக்கோம். Some infringement of patent right, copyright அந்த மாதிரி. Income tax on time pay பண்ணல. TDS கரெக்டா remit பண்ணல. Delay இருக்கு அப்ப penalty pay பண்றோம். அதெல்லாம் என்னது? Are they connected to my business? That is called as non-operating expenses. That will come in which account? General P&L. அதே மாதிரி common borrowing இருக்கு, general borrowing இருக்கு, அதுக்கு நம்ம interest pay பண்றோம். அப்படின்னா that will come in which account? General P&L.
Normally in the expenses record
P&L accountல charge பண்ணும். See, income tax வேற, accounting வேற. Income taxல penalty paid எல்லாம் disallowed. But accountingல penalty pay பண்ணா income tax are disallowed. But accounting profit output பண்ணும்போது என்ன பண்ணுவீங்க? You will charge it. Okay, listen. Why first department A should transfer to B at selling price? Let's assume I am in charge of spinning factory. You are in charge of weaving factory. I manufacture goods at cost. If I transfer at cost and amount, opening stock purchases, all expense may cost இருக்கும். If I transfer the goods at cost and amount, my gross profit will be thin. But you are receiving from me at what? Cost price. You will sell your cloth at your regular selling price. You will double advantage. You are getting from me at what price? Cost price. You will sell it at your normal selling price now. Your performance will be super duper overstated. My performance will be understated. My GP margin will be only 5%. Your GP margin will be like 45%. So to avoid this, what the departmental managers will do is, department X, when they transfer goods to department B, they fix which one? They transfer at what price? Selling price. So that my performance is not understated. But while preparing final accounts, this is divisional performance analysis. But while preparing final accounts, can I record the stock at invoice price? No, I should record the stock at what price? Cost price. That's why we remove it here. Look at, I'm continuing with the same example which I had given. In the last example, if goods were transferred at what price? Selling price. 75% of the stock away includes what? Transferred goods at what price? Invoice price. GP ratio of the last year. A 30%, B how much percentage? This is not current year GP ratio. This is which year GP ratio? Last year GP ratio. A lot of understanding you have to make it over here. Have we copied this part? I mean, this part is over, first part. In the last example, if the goods were transferred at selling price. Copy this, then we will proceed. Now, here you have to make a lot of understanding, pay attention. In the last example, goods were transferred at what price? Selling price. Will it make a difference in trading account? Trading account போடும்போது by transfer to A, how much? 3 lakhs. Will you make any adjustment? No. This is already selling price. This is already which price? Selling price. To transfer from B, how much? 3 lakhs. You will record in which account? Trading account as usual. No adjustment required. You will prepare P&L account also. There no adjustment required. Now, adjustment is required only for which one? Stock. Now tell me, what is the net profit that we got for A and B? 3 lakhs and which one? 9 lakhs. 3 lakhs and 9 lakhs. Okay. This we are going to prepare which account? General P&L account. General P&L account. Wait பண்ணுங்க. Now, look at the point number 1. 75% of which stock? Who transferred goods? B. Who received it? So who will have the stock? A will have the stock. A will have the stock. A stock, how much percentage? 75% of stock away include transferred goods at what price? Invoice price. Check the problem. What is opening stock away? Opening stock away is how much? 20,000. So by stock reserve போடும்போது transferred stock. Transferred opening stock பாத்தீங்கன்னா 20,000ல எவ்வளவு percent 75%. 20,000 into 75%. This into what is the profit margin? There are two profit margin given. GP ratio of A is 30%, B is 40%. Which GP ratio will you take? Who transferred goods? B transferred goods. B transferred goods. Who charged profit? B charged profit. So transferred opening stock into transferring departments GP ratio. Transferring departments GP ratio. So 20,000 into 75% will give us transferred opening stock. That into how much percentage? 40%. Then why that other one is given? Just to confuse you all now. So 15,000 into எவ்வளவு percent? 40%. Any doubt in it? Transferred opening stock. Whose opening stock? A's stock. A's opening stock into whose ratio? B's GP ratio. Okay, by stock reserve we removed how much? 6,000. Wait பண்ணுங்க. To stock reserve, this is transferred with stock. Closing stock into transferring departments GP ratio. Here also the transferring departments GP percentage. Closing stock பாருங்க எவ்வளவு இருக்கு? A ஓட closing stock. Closing stock of A 70,000. That into எவ்வளவு percentage transferred stock? 75% transferred stock. கொடுத்திருக்கோம். Point number 1 பாருங்க 75% of stocks. Are they using a singular word or plural word? Plural. Stocks means both with stock. Opening stock as well as closing stock. So 70,000 into 75% into எவ்வளவு percentage? Into, don't tell 40%. 40% is last year's GP ratio. 40% is last year's GP ratio. அதுக்கு opening stock last year wait பண்ணுங்க. Opening stock எப்போ transfer பண்ணிருக்கோம்? When opening stock was transferred? Current year or last year? Last year. So we applied 40% for which stock? Opening stock. Why? Because it was transferred in which year? Last year. So work out the current year GP ratio. Can you work out current year GP ratio of department B? Think பண்ணுங்க. What is the gross profit? What is the gross profit? 10,70,000 divided by wait பண்ணுங்க. நார்மலா GP ratio எப்படி work out பண்ணுவோம்? Gross profit divided by sales into 100 over. இல்லையா? But in the problem, the profit is earned, is it only on external sales? B makes profit only for external sales or internal transfer also? Internal transfer also. So GP ratio is nothing but gross profit divided by sales plus transfer into 100. So what is the GP gross profit? 10,70,000 divided by what is the sales? What is the sales? 17 lakhs plus transfer 3 lakhs into 100. 3 lakhs into 100. What is the percentage? 53.5%. 53.5%. This is the current year GP ratio of which department? B. Current year GP ratio of B. So 70,000 into 75% into எவ்வளவு percent? 53.5%. So work out பண்ணுங்க. 70,000 into 75% transferred goods into what is the profit margin? 53.5%. So if you tally this, you will get final net profit. How to get the final net profit? Add up the credits. 3 lakhs plus 9 lakhs plus opening stock reserve minus this one will give us which one? Net profit. So 2 or 3 understandings that you have to make. Let me do sum up. Number 1, the goods are transferred at what price in this problem? In this case, invoice price. In trading account, will it make any difference? By transfer to transfer, it is recorded at what price? Invoice price. It is recorded at what price? Invoice price, number 1. Number 2, when the goods are transferred at invoice price, receiving department stock will be at what price? Invoice price. So, receiving department stock. This is transferred opening stock of which department? Receiving department. transferred opening stock of which department? Receiving department into transferring department GP ratio. So A stock into B ratio, how much you got? 6,000. Closing stock also 70,000 into 75%. Receiving department stock into what is your current year GP ratio? GP by sales plus transfer into 100. You get how much? 53.5%. 28,087.5. You get net profit after all these things. Take it. So bring the net profit, opening stock, transferred goods into transferring department GP ratio. So A's opening stock into which ratio? B's ratio. Same way, closing stock into current year GP ratio. Sales plus transfer into 100, we get how much? 53.5%. What is the purpose of removing the stock reserve? To show the true profit, number one. For balance sheet valuation, for example, closing stock minus this profit element we will show. We'll add up the closing stock minus profit element. We'll record the stock at what price? Cost price. See, 3 lakhs plus 9 lakhs, 12 lakhs may be for individual department profit. For the company as a whole, this is your net profit. After eliminating stock reserve, this is your net profit. Please note everything because take receiving department stock into transferring department GP ratio. Stock is with A, but profit is charged by B. The closing stock of receiving department, only transferred goods, that into current year GP ratio. Why current year GP ratio? Because the goods are transferred in the current year. Closing stock is out of which one? Current year transfer. If you look at officially, departmental accounts is over. Prepare which account? Trading account, then P&L account, then prepare which one? General P&L account. In this, they can add some complications and they can give in the question. We'll proceed. Let me to take one or two problems from your study material also and work out, or just check it. Okay, you can go through at home. This illustration number 3. Okay, I hope we have done this question. Way model question in the 3 departments. The information is given to that department A, B, C. Purchased units is given. Purchased units is given. Total purchase cost 6 lakhs. Sales, selling price, closing stock is given. You are required to prepare what? Departmental trading account, assuming that rate of profit on sales is at what? Uniform. We have done earlier on the 20% same like they would have done. It will 60% profit margin. 20% profit margin. You can try this at home. Today itself we can take it and try. Question number 2. Same model, only numbers are different. You can try. This question number 3 is like the first question that we have done. We are given opening stock, purchases, debtors at the end, sales, closing stock என்ன கொடுத்திருக்கோம்? Value of furniture, then floor space, number of employees, electricity consumed is given to us. Then we are given which one? Various expenses. Various expenses. Provision for balance எவ்வளவு percentage? 5%. They would have done, for example, trading account, P&L account by apportioning the expenses. They would have given the basis of apportionment also. Carriage inwards, carriage outwards, and the logical கொடுத்திருப்போம். This model, there is nothing but our question number 1. Yes. Go to this. Illustration number 4 பாருங்க. Mr. X has two departments, department A and B. From the following particulars, prepare which one? Trading P&L account for the ending கொடுத்திருக்காங்க. Opening stock, purchases, sales, wages, carriage is given, then closing stock is given. Look at purchased goods transferred from whom to whom? B to A கொடுத்திருக்காங்க, then B to A is given, then A to B, which means both are transferring. A to B as well as what? B to A. Then finished goods transferred by A to B as well as what? B to A கொடுத்திருக்காங்க, then transferred goods return பண்ணிருக்காங்க. Transferred goods என்ன பண்ணிருக்காங்க? Return பண்ணிருக்காங்க. You are informed that the purchased goods have been transferred at their cost price. Look at purchased goods are transferred at what price? Cost price. But finished goods are transferred at selling price. Selling price. 20% of the closing stock of each department represents what? Goods received from which department? Other department. So here, the profit removal is required only for which stock? Finished goods transferred. Finished goods transferred. 20% of the finished stock represents finished goods from which department? Other department கொடுத்திருக்காங்க. So this problem we'll do in the class. We'll do it in the class. Start. Start with which one? Opening stock only purchased goods at cost price. Start. Departmental trading P&L account. You are going to work out first. Of course, don't scroll to the solution. Try to work out on your own. First record all these things, அப்புறமா transfer record பண்ணுவோம். First record opening stock, purchases, sales, wages, carriage, closing stock எல்லாம் record பண்ணிடுங்க. அப்புறமா then we'll record the transfer. Simple rule, let it be transfer or return. What is the rule? Debit the receiver, credit the giver. அவ்வளவுதான். Purchased goods, so finished goods, so whatever it is. If it is transferred, credit the giver, debit the receiver. Let it be transfer or return. That is the same rule we are going to follow. Start. You do it first, then I will wait. Find out the gross profit. Record all these things. Opening stock, purchases, sales, wages, closing stock வரைக்கும் record பண்ணிக்கங்க. Then we'll record the transfers. Record பண்ணியாச்சா? Now tell me, what are the departments? Department A, B done. Tell me the opening stock A, B. 20,000, 12,000. Purchases 90, 92,000 and 68,000. Sales 1,40,000, then 1,12,000. By closing stock, we've got two types of goods. One is purchased goods, finished goods. எவ்வளவு இருக்கு? Purchased goods, finished goods. 4,500 and 6,000 is for purchased goods. 4,500 and which one? 6,000 is for purchased goods. Finished goods எவ்வளவு இருக்கு? 24,000, 14,000. Then this is for which stock? Closing stock. Any direct expenses given? Wages எவ்வளவு கொடுத்திருக்கோம்? 12,000, 8,000 carriage கொடு. The wages how much?
12,000, 8,000.
Then to carriage how much? 2,000? 2,000. Wait பண்ணுங்க. By transfer of purchased goods, credit the giver, debit the receiver rule. Transfer of purchased goods, B to A எவ்வளவு? B column 10,000 you will credit. A column how much you will credit? 8,000. So how much to record? A's column, A transfers how much? 8,000. B transfers how much? 10,000. Wait பண்ணுங்க. To transfer of purchased goods. அப்படி record பண்ணுவோம். 10,000, 8,000. Once again repeat. Credit the giver. A transfers 8,000. B transfers how much? 10,000. That will be debited in the other way. Next என்ன கொடுத்திருக்கோம்? Finished goods transferred. Finished goods transferred. எப்படி record பண்ணுவீங்க? By transfer of finished goods. How much A transfer to B? 40. Hello, amount A transfer to B? 35,000 and 40,000. 35,000 and what? 40,000. அதே மாதிரி to transfer of which one? Finished goods 40,000 and what? 35,000. Returns எல்லாம் நீங்க மைனஸ் பண்ணவா பிளஸ் பண்ணா யோசிக்காதீங்க. இங்கேயும் credit the giver, debit the receiver தான். By return of finished goods, A to B na A gave, B received. Credit the giver, debit the receiver. A to B na A காலத்துல credit பண்ணுவோம், B காலத்துல credit பண்ணுவோம். அந்த 35,000, 40,000. அல்ல டவுட் இருக்கா? 35,000, 40,000. A to B. அப்பனா யார் கொடுக்கிறா? அப்போ credit the giver A, credit the giver B. 35 and 40 receive பண்ணனும், அப்படி ரிவர்ஸ்ல டெபிட் பண்ணுங்க. Then by return return of finished goods transferred. ரொம்ப simple. Credit the giver. A how much transferred? B how much transferred? 7,000. The minus பண்ணுமா பிளஸ் பண்ணுமா போட்டா ரொம்ப டிஃபிகல்ட்டா இருக்கும். Just credit the giver, debit the receiver. To return of finished goods transferred. எவ்வளோ? 7,000 and what? 10,000. Tally பண்ணுங்க. You will get the gross profit. Any indirect expenses given in the problem? Any indirect expenses given in the problem? No. Hope our answer matches the book answer. What is it? 38,500 and 46,000. Correct? 38,500 and 46,000. No indirect expenses are given. So gross profit is the net profit in this question. Gross profit and which profit is same? Net profit are the same. Now you prepare which account? General P&L account. Try to do the general P&L account and try to do the loading. Opening stock reserve will not count. No opening stock reserve. This will be nil. It's clearly mentioned in the problem. Adjustments பாருங்க என்ன கொடுத்திருக்கோம். You are informed that purchased goods are being transferred at what price? Purchase cost. Finished goods are transferred at what price? Market price. 20% of the closing stock represented which one? Finished goods received from which department? Other department. Which means only closing stock has what? Closing stock has which one? Transferred goods. அது மட்டும் இல்லாம ப்ராப்ளத்திலே பாருங்களேன். Opening stock they have given at what price? Cost price. At cost price. So wait. Closing stock they have got two goods. One is purchased goods. Another one is which one? Finished goods. Which will have at selling price? Purchased goods are transferred at cost. Purchased goods are transferred at cost. That is at cost price. Which one will be at selling price?
Finished goods.
Finished goods are at selling price. Finished goods are at selling price. அதுக்கு தான் remove பண்ண loading. Wait பண்ணுங்க. Both will have the goods. Transfer to closing stock with A இருக்கும் with B இருக்கும். Because A transferred to B. Yes, in between that year, in between this year, the goods are transferred during the year. What is the closing stock of A? Transferred closing stock 24,000 level percent. 20%. This into GP ratio. This into GP ratio. With B இருக்கிற stock எவ்வளவு இருக்கும்? 14,000 into 20%. This into some GP ratio. Wait, who has the stock? Both have the stock. A transferred to B, B transferred to what? A. இப்போ ரெண்டு பேர்த்தோட GP ratio we want. Both A's GP ratio as well as what? B's GP ratio we want. Be careful in working. Tell me the correct GP ratio. We want both for A as well as B. Wait, sales plus transfer of which goods? Finished goods minus return. மறந்துடாதீங்க. Returns பண்ணிருக்காங்க. Sales plus transfer of finished goods minus what? Returns எடுத்துக்கணும். Into 100. இப்போ எங்க கொடுத்திருக்காங்க காஸ்ட்? Return of. So transfer பண்ணது என்ன price? Finished goods are transferred at what price? Selling price, which I would have recorded at selling price, both purchaser and receiver. Okay, so return also would have taken place at what price? Selling price. Department A. Department A ஓட gross profit எவ்வளவு சொல்லுங்க? Gross profit எவ்வளவு? 38,500 divided by what is the sales of Department A? 1,40,000 plus A to B transfer. A to B ஓட transfer. A to B எவ்வளவு transfer பண்ணிருக்கான்? 40,000 minus return means B to A ஓட returns. Transfer from A to B, returned from what? B to A minus 1. What is returned from B to A? 10,000. Okay. Transferred from which one? A to B. returned from B to A. 40,000 நான் ட்ரான்ஸ்ஃபர் பண்ணிருக்கேன், அதுல அவன் 10,000 ரிட்டர்ன் பண்ணிட்டான். ஸோ இப்போ ஒர்க் அவுட் பண்ணுங்க, எவ்வளவு பர்சன்டேஜ் வருது டிபார்ட்மெண்ட் ஏ ஓடுது. டிபார்ட்மெண்ட் ஏ ஓட ஜிபி ரேஷியோ 22 பாயிண்ட் கரெக்டா? இதே மாதிரி டிபார்ட்மெண்ட் பி ஒர்க் அவுட் பண்ணுங்க. டிபார்ட்மெண்ட் பிக்கு போடும்போது what is the gross profit? 46,000. B to A எவ்வளவு ரிட்டர்ன் பாருங்களேன். B to A 7,000 தான ரிட்டர்ன். செக். B to A எவ்வளவு ரிட்டர்ன் பண்ணிருக்கான்? ரிட்டர்ன் ஆஃப் finished goods. B to A எவ்வளவு? 7,000 தானே. அப்போ 1,40,000 சேல்ஸ், நான் உங்களுக்கு டிரான்ஸ்ஃபர் பண்ணது 40,000, நீங்க எனக்கு எவ்வளவு ரிட்டர்ன் பண்ணிருக்கீங்க? 7,000. B to A ரிட்டர்ன் 7,000. ஒர்க் அவுட் பண்ணு. It's a very good problem. எவ்வளவு பர்சன்டேஜ்? 22 பாயிண்ட் அவனோடது 4 lakhs, sorry, 46,000 divided by something into 100 divided by something. What is the sales of B? Sales of B பாருங்க, what lakh? 12,000 plus B to A எவ்வளவு? 30 minus A to B, this into 100. எவ்வளவு பர்சன்டேஜ்? 33 பாயிண்ட். So wait பண்ணுங்க. For A stock, whose ratio will apply? Yes, very good. This into 33 point எவ்வளவு percent? 5%. B stock into A ratio. என்னோட stock into உங்களோட ratio, your stock into my ratio. 22.25%. Stock is with you, I charge the profit, and stock is with me and you charge the profit. Tally this, you will get net profit. வேற ஏதோ ப்ராஃபிட் பர்சன்டேஜ் போட்டிருக்காங்க, நம்ம ஃபுல்லா போடலையும். கரெக்டாக போட்டிருக்கோம். டிபார்ட்மெண்ட் ஏ 1,40,000 பிளஸ் 35,000 மைனஸ் 7,000 போட்டிருக்கோம் பாருங்க. ஏன் பிளஸ் 40 போட்டோம்? ஏ டு பி டிரான்ஸ்ஃபர் எவ்வளவு பாருங்க, செக் பண்ணுங்க. 35 தானே, அப்புறம் நம்ம 40 போட்டோம். சொல்லவே இல்லையா? ஏ டு பி டிரான்ஸ்ஃபர் எவ்வளவு இருக்கு? 35,000 தானே. சாரி, சேஞ்ச் யுவர் ஆன்சர். இது வந்து 40,000. எல்லாம் போட்டதுக்கு அப்புறம் கடைசியில் தப்போம். So what is the percentage? It will change. Change it. Sorry. A to B தானே transfer பண்ணணும்.
92.92%.
92.92%. நல்ல வேலை இப்ப பார்த்தோம். ரெக்கார்ட் கிளாஸ் ஆன்சர் பண்றவங்க ஐயோ பாவம் இருப்பாங்க. சொல்லுங்க. This one,
32.39.
82.39. $82,304. Check the textbook answer. Yes, correct. Your profit percentage is also correct. Ignore their workings. Let us go for our own method. Done? Any doubt in it? So, trading account, we just record all the general item, transfer how it is recorded, credit the giver and what? Debit the receiver. Let it be transfer or return, credit the giver and which one? Debit the receiver. We prepare general P&L account. While removing the stock reserve, be careful. Take the receiving department stock. Receiving department stock which was transferred at selling price into what? Transferring department GP ratio. While working out GP ratio, say GP divided by sales plus transfer minus what? Returns. Be careful in taking the numbers. Okay, then we work out the GP ratio. Receiving department stock into transferring department GP ratio. We get net profit. We get which one? Net profit. After the break, we will come back to our material question. Which question we have done now? Question number 1 பண்ணிருக்கோமா? Then question number 5 we have done இல்லையா? Question number 5 is over. Next, we will do question number 2 after the break. It's a very good question, a fantastic question. Okay, where you have to prepare complete final accounts. You have to prepare what? A complete final accounts. We'll do this after the break. For 10 minutes of break, then we'll start. Read question number 2. RDB carries on a business of drapers and tailors in Delhi. R was in charge of department A dealing in cloth. R is in charge of department A. Then D is in charge of department B selling garments. Okay. C is in charge for tailoring section. It has been agreed that each of the partners will receive how much? 75% of the profit disclosed by accounts, and balance profit will be shared in which ratio? 1/2, 1/4, 1/4 ratio. So the first paragraph is to tell you that there are 3 departments. What are the 3 departments? A, B, C, managed by R, D, B. Whatever is the net profit, into how much it will go to them? 75% will go to them. The balance will be shared in which ratio? 1/2, 1/4, 1/4 ratio is given to us. Already, okay, trading P&L account for how many months? This is the most important information. It's not for the whole year they are given. For how many months? 6 months they are given. Opening stock already bifurcated, no problem. Opening stock already bifurcated, no issues. Purchases already bifurcated, it is a direct one. Sales is already given separate. Closing stock is already given separate, no problem. Now, what is common? Salaries and wages given common. Advertisement, rent, all those things are given as which one? Common item. Discount receipt is given as which one? Common thing which we have to split. We will see. After consideration, the following, the prepare which one? Departmental trading P&L account. Look at what is the first one? Cloth of the value 10,700. Then other goods valued 600 were transferred at which price? Selling price by A and B to C. Who transferred? A and B. You credit A and B and debit what? C in the trading account. Then cloth and garments are showed in the showroom. Showroom is department C. Showroom is which one? Department B. Department B. Okay. Tailoring work is carried out in the workshop. Which is workshop? C. Workshop is C. Next, read further. Details of salaries and wages are given to us. General office how much? 50%. Showroom 25%. 25% is for workshop. On that 75% is paid for what? Tailoring alone. Then allocate general office expense in the ratio of 3:2:1. Distribute showroom expense in the ratio of 1:2. The workshop rent is 1,000 per month. Rent of the general office to be allocated equally between what? A and B given. Depreciation charges to be divided equally amongst what? 3 departments. All other department expenses are allocated on the basis of which one? Turnover given. Discount receipt to be credited to the departmental accounts. Opening stock of C does not include any transferred goods. So we have to eliminate stock reserve only for the closing stock. Look at closing stock. What is given? This includes how much? 5,700 of transferred goods. So stock reserve you have to eliminate only for which stock? Closing stock. So before we start with the departmental trading P&L account, we have to see how to apportion the expenses. How to apportion which one? Expenses. Start. Working notes. Number 1, salaries and wages. Salaries and wages. How much is given in the P&L account? 48,000. Salaries and wages. $48,000. Look at the adjustment, please. Look at the adjustment given. Salaries and wages details are given. How much for general office? 50% for general office. அப்போ 50% போட என்ன வரும்? 24,000. அப்புறம் எவ்வளவு percentage is for showroom? 25% is for showroom. 25% என்ன வரும்? 12,000. Balance is for which one? Balance is for tailoring in the workshop. Workshop எவ்வளவு percent? 25%. 12,000 வெயிட் பண்ணுங்க. இந்த 12,000ல என்ன பண்ணிருக்காங்க? 75%. 75% is paid for tailor work. Tailor workனா எவ்வளவு வரும்? 9,000 வெயிட் பண்ணுங்க. Whatever you spend for manufacturing is called as which one? Direct wages. Direct wages, it will come in trading account. It will come in which account? Trading account of which department? Department C. Because workshop is department C. Workshop is which one? Department C. Once again, out of 12,000, how much has been spent? 75% is given for tailoring work. That is which one? Direct wages. That will come in which account? Trading account of which department? Why department C? Clear up with the compartment. First paragraph. First paragraph. What is given? Department C is which section? Tailoring section. So, on the wages 9,000 will come in which account? Trading account. Pay attention. Pay attention. The balance all irukku. 25%, 3,000. This is indirect wages. Indirect wages. This will come in profit and loss account. This will come in which account? P&L account of Department C. Once again I repeat, pay attention. What is workshop in this problem? Department A or B or C? C. What is the wages? 12,000. Whatever you paid for tailoring is which one? Direct wages. Direct wages will come in which account? Trading account of which column? Department C. Balance 25% is which one? Indirect wages. That will come in which account? P&L account of Department C. Okay, unless a student has solved this in the class, very difficult to think this much. Costing come financial accounts. Okay, wait பண்ணுங்க. General office wages எவ்வளவு இருக்கு? 24,000. Look at the adjustment. Allocate the general office expenses. பாருங்க, next bullet point. Allocate the general office expenses in the proportion of 3:2:1. 3:2:1. So this has to be allocated amongst department A, B, C. In which ratio? 3:2:1. 3:2:1. 3:2:1 ratio. Allocate this expenses in 3:2:1 ratio. This 24,000 you would allocate in 3:2:1. என்ன வரும்? 12,000, 8,000, 4,000. இது வந்து ஜெனரல் ஆபீஸோட salaries and wages. ஷோரூம் என்ன சொல்லியிருக்கான்? ஷோரூம் share it between whom? A and B. A and B என்ன சொல்லியிருக்கான்? 1:2 ratio. 1:2 ratio. So which means how much will come? 4,000 and what? 8,000. So many allocations. So general office expenses are allocated amongst A, B, C in which ratio? 3:2:1 ratio. Showroom expenses are allocated in the ratio of 1:2 between A and B. Workshop salary is how much? 12,000. At the tailoring pay part of the direct wages. What is the direct wage? Costing. What is the direct wages? Whatever is paid for production. Let us take a garment work. What does the direct wages mean? The workers involved in cutting, stitching, ironing, packing, that is called as which wages? Direct wages. That will come in which account? Trading account. What do you mean by indirect wages? Foreman, fitter, cleaner, turner, helper boy, security guard. இவங்களுக்கு pay பண்ணது என்ன wages? Indirect wages. That will come as factory overheads. That is called as what? Factory overheads. Indirect wages for financial accounting purpose. That will be coming in which account? P&L account. Indirect wages will come in which account? P&L. So you will understanding பண்ண வேண்டியிருக்குல்ல? Good. Okay. So which one we apportioned so far? Salaries and wages. இப்போ next expense one. P&L account. What is the next expense? Advertisement. Start. Advertisement. What is advertisement expense given? 2,400. This has to be allocated amongst what? A, B, C. In a ratio. Sales ratio. Sales ratio. Sales பாருங்களா A, B, C ஓட sales சொல்லுங்க. 1,80,000. 1,30,000. 90,000. அந்த ratio எடுத்தீங்கன்னா it will be like 18:13:9 ratio. இந்த ரேஷியோல என்ன பண்ணணும்? அட்வர்டைஸ்மெண்ட் எக்ஸ்பென்ஸ் போர்ஷன் பண்ணணும். So 2,400 into 18/13. Total எவ்வளவு வருது? 18 plus 13 plus 9. So 2400 into 13 by 40. 2400 into 9 by 40. So advertisement is apportioned in the ratio of which one? Sales. Next என்ன கொடுத்திருக்கோம்? P&L accountல பாருங்க என்ன இருக்கு? Rent. What is the rent? 10,800. Think பண்ணுங்க rent எப்படி apportion பண்ணலாம். Go through the problem and think. This is rent includes for workshop. Workshop is which department? Department C. எவ்வளவு per month? 1000 into 6 months. P&L account is given for 6 months. If the student has skipped reading this, the P&L account is given for how many months? 6 months. So rent is for 6 months period only. So 10,000 into 6 and over. 6,000. Workshop rent is 6,000. That will be allocated to what? Department C. Workshop is Department C. Balance. The balance is 10,800 less 6,000. What is the balance? 4,800 for general office. General office expense of to be allocated equally between A and B. So the balance 4,800 you would allocate between A and B equally. So if you look at the allocation for A and B, rent, you know, 2,400 for C, already we worked out how much? 6,000. This is allocation for A, B and which one? C. This is allocation of rent. Rent for the workshop is 6,000, that is Department C. Tailoring work is carried on in what? Workshop, that is Department C. The remaining rent, 4,800, is divided equally between what? A and B. So 2,400 and which one? 6,000. This is which expense? Rent. Next என்ன கொடுத்திருக்கோம் பாருங்க. Discount allowed sundry expenses. Discount allowed and which one? Sundry expense. I go common ratio நினைக்கிறேன். Maybe sales ratio already we know. So discount allowed. And even which was the next one? Sundry expenses. Both can be allocated in the ratio of sales. Discount allowed and sundry expenses. What is the discount allowed amount? 1,200 portion in that ratio. Then sundry expenses in this ratio, 18:13:4 ratio. 540, 390 and 270. 5,400, 3,900, 2,700. So discount allowed and sundry expenses are apportioned in which ratio? Sales ratio. Depreciation என்ன சொல்லிருக்கோம்? Depreciation to be apportioned equally. What is the depreciation? 750 divided by 3. No, 250 each. I hope discount receipt they've given actual amounts. Credit side the discount receipt they've given actual amounts. What is the discount receipt? 400, 250, 150 they've given the actual amounts. So discount allowed and sundry expenses in the ratio which one? Sales. So did we work out apportionment of all the expenses? Opening stock, purchases, sales, closing stock bifurcated and given already. For all the other expenses, salaries and wages, rent, advertisement, discount allowed, sundry expenses, we apportioned already. Depreciation is based on equal ratio. Discount allowed is received is given to us. So required information is worked out. Now we can start with which account? Departmental trading P&L account. Departmental trading P&L account. Let us start. Any doubt in any of the working that we have done? Unless otherwise you worked out this problem in the class, examination director will think பண்ண முடியாது. Start. Particulars and 3 columns. Departmental trading P&L. Tell me the opening stock already bifurcated and given. 37,890. Then 24,000. Then 20,000. Purchases 1,40,000. Then 44,400. Sales 1,80,000 approved. 1,30,000. Then 90,000. By transfer, adjustment number 1, bullet point number 1. Transfer, check பண்ணுங்க. என்ன கொடுத்திருக்காங்க? 10,700 and 600 is transferred by whom? A and B to department C. So how this will be recorded? A 10,000, B
600.
so ரெண்டு சேர்த்து to transfer in C's column it will be recorded. In C's column debit both. Then to wages paid for tailoring work. இங்க வரும். Director in which column? C's column 9,000 will come. Direct wages will come in the C's column. Then closing stock. Closing stock பாருங்க department ABC credit side ல கொடுத்திருக்கோம். Closing stock 4,500, 22,300 and what? 21,600. We will see this transferred stock and all. That is only for stock reserve removal. So 4,500, 22,300 and 21,600. 45,300 then
45,500.
4,500 then 22,300 then 21,600. That's all here. Tally this, you get the gross profit. By gross profit, this amount and this amount. By discount received. Discount received, actual amounts are given. Last adjustment 400, 250. Actual amounts are known to us. 400, 250 and what? 150 actual amounts are known to us. Then to salaries and wages. Below that, indirect wages. Indirect wages in the classify paname 3,000. Then 3:2:1 ratio lenne allocate pannu. This one, general office. General office order wages. Working note one paranga. 12,000, 8,000, 4,000. Then showroom. Showroom order salaries and wages was allocated only between A and B. 4,000 and what? 8,000. Once again, wages paid for tailoring comes in which account? Trading account. 9,000 is charged in which account? Trading account. Indirect wages will come in which account? Profit and loss account. General offices 3:2:1. Showroom expenses 2:1. Allocate panniyaachu. This is which one? Salaries and wages. Look at the other working notes that we prepared. What are the other working notes? Advertisement. Based on sales we apportioned. What is it? 1080, 780, 2. Which one? Rent, we have done a working. 2,400, 2,400 and 6,000. We have done a working for everything. Then discount allowed, sales ratio. 540, 390 and 270. Then to sundry expenses, how much? 5,400, 3,900, then depreciation equally allocated, how much? So this problem talks more on allocation of expenses. It is not over. There is an interdepartmental transfer. There is a stock reserve you have to remove. Next, which account you have to start? General P&L account. Try பண்ணு. General office expenses 3:2:1. Showroom expenses 1:2. Advertisement sales ratio, rent we walked out. Workshop rent, then remaining is equal. Discount, sundry expenses, sales ratio, depreciation, they said to allocate what? Equally. Discount receipt, they have given direct. Or have we copied this or taken up? General P&L account. Any answer for gross profit ratio? Sales plus transfer set on which department? Okay, why A department? Look at including 5,700. Including how much? 5,700 of goods received from which department? A. So you have to take A's GP ratio. You have to take which ratio? A's GP ratio. Let us start with general P&L account. Lot more to do in this. Tell me the net profit of ABC. 31,940, 24,830, 10,290. Then gross profit of which department? A. So what is the gross profit? 57. Divided by sales plus transfer. What is the sales? 1,80,000 plus transfer evlo? Into 100. What evlo percentage varum? 30 year. So 30%. So closing stock, how much? 5,700 direct into 30%. 30%. Evlo varum? 17108. We cannot put net profit directly. Like last question, we cannot put net profit directly. Opening stock reserve kadayadu. We cannot do directly net profit. Some more thing to be adjusted. Look at the first paragraph. Read the first paragraph. Read the first paragraph. What is given? Profit disclosed by accounts. 75%. 75% they will share. So simple. Who are the in charges? Commission Madhuri. Commission to partner. Or D, then B. More simple. Departmental net profit into evlo percent? 75%. What is the net profit? This 31,940. This evlo? 24,830. This 10,290. This into how much percentage? This into 75%. The concerned profit into how much percentage? 75% they will share. So this into 0.75. Okay. That is payable as which one? Commission to them. Any doubt in it? Then wait one minute. To balance of profit. Balance of profit. What do you mean by balance of profit? Now tally this. Total of credit minus debit. Total of credits minus debit so far. Debit means including the stock reserve. What is the balance of profit? 15,055. Balance of profit, how this is shared? RDB. In the ratio share pandranga. 1/2, 1/2, 1/4, 1/4. இந்த ரேஷியோ நம்ம ஷேர் பண்ணி சிம்பிள். So 15,055, this into 1 by 2, this into 1 by 4, this into 1 by 4. That's how they share. Balance of profit is shared amongst the partners. Commission to partner is nothing but departmental profit into 75%. Whatever may be the departmental profit into how much percentage? 75%. The remaining profit is shared amongst the partners in which ratio? Agreed ratio, 1 by 2, 1 by 4, 1 by 4 ratio. Unless the student has worked out this in the class or practiced it, directly the application will not come in the exam. In the Mari, you will think பண்ணி போட மாட்டோம். Especially the apportionment of expenses. Definitely the student might go wrong, and especially that salaries and wages area. Conceptually, the accounts are over. That is, departmental account is over. Number game, they can keep on adding in same. So we prepare trading account, recording the transfers, by transfer to transfer photo. Then we recorded P&L account. Only thing is, in this problem, number game is increased. That is sharing of expenses. Then in the general P&L account, we remove which one? Stock reserve. Who's having the stock? Who's having the stock? C is having the stock. Who transferred it? A transferred it. That's why 5,700 into 30%. Then we recorded commission as directed in the first paragraph. The balance of profit is shared in the agreed ratio. This is question number 2. Question number 3. I do not want to even discuss or talk on that. Try to solve. Try to solve. Question number 3. You try to work out. I'll give you around 15 minutes of time. You prepare which account? Trading account, get which one? Gross profit, then prepare which account? P&L account, prepare net profit, then do general P&L account also. Try பண்ணுங்க. Okay, the question is clear. Manufacturing expenses 0 and 60,000, selling expenses 20,000 and 6,000, stock on the 2 lakhs and 60,000, like that you consider. Goods are transferred at what price? Selling price. Why there is no opening stock reserve? Okay, in question number 2. Okay, very good doubt, but look at last bullet point. Opening stock of department C did not include any goods transferred from department A. Opening stock was not having any transferred goods. Only the closing stock has the 5,700 of transferred goods. That's why we have not put opening stock reserve. The first one, I'll explain, no issues. See, the first one, you're telling about the salaries and wages, right? Salaries and wages. Question number 3, first one. Which one? Can you unmute and ask me?
Yes, sir. Sorry. Can you scroll down? It's the first statement. Saying stock in the revenue department is 75%. Scroll down, please. Yeah.
This one, for example, I got the goods from you. I got the goods from you. Okay, my stock includes 75% cloth, which means transferred from you. 75% is the cloth that is transferred from you. Remaining 25% is my manufacturing cost. That is my manufacturing cost. So while removing the loading, you should remove only for 75%. For example, stock is, let us assume, what is the stock here? 60,000. The 60,000, 75% is only what? Cloth. So you remove loading only for 75%. Remaining 25% is my manufacturing expenses. Same way, in the opening stock, 75% is the cloth, transferred cloth. Remaining is what? Remaining is my manufacturing expenses. So profit removal is required only for the transferred stock. That is 75%. What is the answer for your gross profit? 4 lakh and what? 85,000. Correct. What is the GP ratio? Current year GP ratio. How to work out? 4 lakhs divided by what is the sales plus transfer? This into 100. எவ்வளவு percentage வந்துச்சு? What is the opening stock? Opening stock of ready made. 50,000 into 75% is cloth, that into last year GP ratio. Then to stock reserve. Closing stock how much? 60,000 into 75% into 16%. That is current year GP ratio. Are we given some general expenses? Okay. Maybe now, okay. This should come in which account? General P&L account la varuma illa P&L account la varuma actually. Sorry, இந்த அப்படியே கண்டினியூ பண்ணீங்க அப்புறமா ஜெனரல் P&L account by GP எவ்வளோ 4 lakh and which one 85,000 to general expenses you can apportion in the ratio of sales. You can apportion in the ratio of sales. Or we can charge it in general P&L account also. There are two approaches for this problem. We can charge it directly in which one? General P&L account to general expenses. Since it is given as a business for the whole, no basis is given. You can charge it in which account? General P&L account and find out the final net profit. General expense you can do it in P&L account and charge and find out net profit அப்படியும் போடலாம். இல்ல we can assume that since it is given for the whole business as a whole, we can charge it in which account? General P&L account also. Selling expense இருக்கா என்ன? அப்படியா? அப்போ அதெல்லாம் வரும். Sorry. Then I made a mistake. But don't take general expenses here, sorry. Can you buy net profit போட்டுக்கலாம். By GP bring the answer. What is the GP? 4 lakh and what? 85,000. To when expenses? Selling expenses. Selling expenses? To general expenses? 17. Tally panna net profit. What is the net profit? 150. So general P&L account bring this net profit. And then tally it. என்ன கொடுத்துருக்கோம் பாருங்க, என்ன கொடுத்துருக்கோம். Stocks of the ready-made department may be considered consisting of 75% cloth. என்னோட ஸ்டாக்ல ஃபுல்லும் கிளாத் இல்லை, நான் கிளாத் தான் உங்ககிட்ட இருந்து ட்ரான்ஸ்ஃபர் பண்ணிருக்கேன். I transferred only cloth from you. My stock into how much percentage is cloth? 75% is cloth. That is assume that it is transferred from the other department. So stock into 75%, that into last year GP ratio for the opening stock, that into current year GP ratio for the closing stock. Completed this? Over? Okay, question number 4, you can try it at home. They have given purchases, actual sales, gross profit margin on which one? Normal selling price கொடுத்திருக்கா. During the year, some discounts were offered. Okay, discount sales at normal selling price 10,000 na, sales at actual price is how much? 7,500 கொடுத்திருக்காங்க. You try this and work it at home, where you have to find out the closing stock value. Which value? Closing stock value and close it kind of a thing. Try to work out this. Fifth question we have done. Go to the sixth question. Go to the sixth question. Read the sixth question, understand it, then we will solve it. Mr. Thiru and Co had how many departments? 4 departments, SATP. Each is managed by a manager who is eligible for a commission of how much? 10% of respective departmental profit. Minimum how much pay பண்ணணும்? Which means if there is a loss also you will pay 6,000. If profit is less also you will pay 6,000. Interdepartmental transfers took place at what price? Loaded price means at invoice price. S to A பாருங்க என்ன கொடுத்திருக்காங்க? 10% above cost. S to P 20% above the cost. T to P 20% above the cost. T to A on cost transfer கொடுத்திருக்காங்க. On cost the transfer is given. Then for the year ending 31st March 2017, the firm has already prepared and closed which account? Departmental accounts. Subsequently, read it. It was discovered that the closing stock of departments had been included at what? Loaded price instead of which price? Cost price. So, what is the meaning of this? They have closed the final accounts without eliminating stock reserve. They have closed final accounts without eliminating stock reserve. So, commission calculated also will be wrong. Commission for the manager, not for the partner. Okay, commission for the manager should be worked out after eliminating which one? Loading. But they have just charged and closed without eliminating that profit. Next. They have given the final profit or loss. This is a wrong profit given. 38,000 என்ன கொடுத்திருக்கான்? 50,400 then 72,000 then 10,000, 1,08,000 is given. Interdepartmental transfers at what price? Loaded price கொடுத்திருக்காங்க. 22,000 from S, 48,000 from T, 3,600 from T and 2,200 from S. What are they expecting in this problem? Simple. They ask you to do the rectification of error. They ask you to do which one? The rectification of error. What is the error? What is the error? Pay attention. They have taken net profit. Did they deducted stock reserve? Without doing this, they overrode which one? Commission to manager. Then they have given which one? Final net profit. This is what is correct treatment. But they have not eliminated stock reserve. Net profit எடுத்துட்டு commission to manager போட்டான். Final net profit கொடுத்துட்டாங்க. How to rectify the error? How to rectify the error? Simple. Let us take the net profit given. Let us take which one? Net profit given. Add commission which was wrongly calculated. Then you will get net profit before the commission. First we have to eliminate which one? That is the profit element. That is unrealized profit. You can call it as unrealized profit or you can call it as stock reserve. That loading you would remove. Stock reserve less பண்ணதுக்கு அப்புறமே என்ன வரும்? Corrected net profit will come before commission. Then provide which one? Commission. Commission minimum எவ்வளவு pay பண்ணணும்? 6,000 or which one? 10%. Then you will get which one? Final net profit after rectification. Okay. So net profit given, add the commission which was wrongly calculated without eliminating stock reserve. You will get net profit before the commission. Adjust for the stock reserve. Then work out the corrected net profit. Then provide the correct commission. Then you will get which one? Final net profit after what? Rectification. I told you the logic. You work out the numbers. Commission எவ்வளவு percentage pay பண்ணணும்? Minimum 6,000 but subject to என்ன கொடுத்திருக்கோம்? 10%. ரொம்ப simple. Pay attention. Profit is 1 lakh. 1 lakhல 10% போட்டா 10,000 வரும். 10,000 வரும். But minimum எவ்வளவு pay பண்ணணும்? Now what will you pay? 10,000. Suppose the profit is only 40,000. 40,000 into 10% apply பண்ணா 4,000 வரும். But minimum how much you have to pay? 6,000 pay பண்ணணும். Suppose if there is a loss of 20,000. Minimum commission how much you have to pay? 6,000 you have to pay. So minimum means if there is an insufficient profit or if there is a loss, you have to pay that minimum. How much? 6,000. Suppose if actual commission is more than the 6,000, என்ன பண்ணுவீங்க? Actual commission will be paid. Try this. This is one of the most repeated examination questions. This is for question number. First S என்ன கொடுத்துக்கோம்? Profit or loss? இருக்கும் 50,000. No, net profit. A S பாருங்க loss of profit. Yes, 38,000 loss. A 50,400. Then T 72,000. Then AP 1 lakh 8,000. Wait பண்ணுங்க. This net profit is given after calculating the commission. Add the commission which was wrongly calculated. Add the commission which was wrongly calculated. Otherwise, just put wrong commission. Wait பண்ணுங்க. எப்படி work out பண்ணுவீங்க commission? For A எவ்வளவு pay பண்ணிருப்பாங்க? 6,000 pay பண்ணிருப்பாங்க. For A also, S also? No, check பண்ணி பாருங்க. 50,400 into, if this is like 90, see if net profit is 100, if net profit is 100, if net profit is how much? 100, commission is how much? 10, final net profit is like 90. 50,400 into 10 by 90 போட்டு பாருங்க. So 5,600 something வரும், but minimum எவ்வளவு pay பண்ணிருப்போம்? 6,000. For T it is 72,000 into 10 by 90. 72,000 into 10 by 90. Why 10 by 90? Why 10 by 90? If profit is 100, commission is 10, net profit after commission would have been what? 90. So 8,000 pay பண்ணிருக்கோம். Same way for the other one. 1,08,000 into 10 by 90. You understand 10 by 90? If profit is 100, commission is 10, then profit given is 90. So 12,000. Add back, you will get the profit before commission. What is the profit before commission? 38,000 plus 6,000. Then remember, stock is transferred from S to யாராருக்கு ட்ரான்ஸ்ஃபர் பண்ணிருப்பாங்க ஸ்டாக் அட்ஜஸ்ட்மெண்ட்ல பாருங்க S to A இருக்கு S to T இருக்கு S to A and what from S to T also it is there. S to A,
S to B.
S to P, then from T to A இருக்கு, then from T to P also it is there. Eliminate the unrealized profit. Eliminate the unrealized profit or stock reserve. Then you will get corrected net profit before commission. On that you work out which one? Commission how much percentage? 10% subject to a minimum of how much? 6,000. S to A, what is stock transferred? S to A, what is the stock transferred? Check the problem. S to A, how much is transferred? 22,000. Look at the profit margin given. S to A, what percent? 10% above the cost. So 10 by on cost 10%. Now on sales it will become 10 by 110. 10 by 110. On cost 10 by 100. Now on sales it will become what? 10 by 110. So who transferred this? Who transferred this? Yes, transferred this. So S to A போடும்போது 22,000 into 10 by 110. Where will you remove this? Think. இங்க தான் நிறைய பேர் தப்பு பண்ணாங்க. This is where many students went wrong. Who transferred the stock? Answer. Who transferred the stock? Yes, transferred the stock. To whom it is transferred? A. Okay. How much? 22,000 into 10 by 110. அது வரைக்கும் கிளியரா இருக்கு இல்லையா? இப்போ எதுல அந்த 2,000 ரிமூவ் பண்ணணும்? From where you remove the 2,000? Wait பண்ணுங்க. Stock is with whom? A. Who charged the profit? Yes. From yes you remove it. Already அவன் இன்வாய்ஸ் பிரைஸ்ல வாங்கிருக்கான். அவனுக்கிட்ட போய் ஏல போய் ப்ராஃபிட் ரிமூவ் பண்ண என்ன லாஜிக்? Who charged the profit? Yes, charge the profit. Otherwise, stock is with A, profit is with yes. Our profit is included by yes, remove from yes. We are not removing stock. We are removing which one? Profit. Profit is removed from the department which has charged this. Otherwise, this unrealized profit is included in the profit of yes. Yes to P. நிறைய பேர் என்ன பண்ணாங்க கொண்டு போய் ஏல மைனஸ் பண்ணி வச்சிட்டாங்க இல்லையா? ஸ்டாக் இஸ் வித் A but profit is with yes. Then S to P. S to P எவ்வளவு ட்ரான்ஸ்ஃபர் பண்ணிருக்கான்? P ல பாருங்க என்ன கொடுத்திருக்கான் பாருங்க. 1,200 from S. 1,200 from S. So 1,200 into 20 by 120. 200. இது S ல தான் ரிமூவ் பண்ணணும். அப்புறம் T to A 48,000 into 20 by 120. This is from which department? T. எவ்வளவு வரும்? 8,000. Then T to P எவ்வளவு ட்ரான்ஸ்ஃபர் பண்ணிருக்கான் பாருங்க. 3,600 T to P. 3,600 T to P. So 3,600 into 20 by 120. How much? 600. So transferring department has charged this profit, eliminate from their profit. So this will give us correct net profit before commission. Correct net profit before commission. Then commission will be
10%.
first department எவ்வளவு pay பண்ணுவீங்க minimum 6000. Second department 10% apply பண்ணா 5640 வரும். But minimum you have to pay how much? 6000. Third department in the 71400 ல 10%. 7140. Same way last department 12000. See, if your commission is more than that 6000, what do you mean by minimum? You will get at least 6000. If actual commission is more, you pay that. So reduce this, you will get net profit after rectification. This was one of the most repeated question for about 6 marks in the past exam. No accounts is tested, only a rectification of error is tested here. So net profit given, add back the wrong commission, you will get net profit before the commission. Please remember, while eliminating the unrealized profit, eliminate from what? The department which has charged the profit. The department which has charged the profit. S to A, S to P eliminated from S. T to A, T to P eliminated from what? T. Then you will get corrected net profit before the commission. Eliminate the commission. You will get which one? Final net profit after rectification. Don't worry, நான் next பாடத்தை பொறுத்து டார்ச்சர் பண்ண போறல, பட் நீங்க homework பண்ணுங்க. Which question? Question number 7. Try to work this at home. Try to work out question number 7 at home. So next session we will start discussing with which one? Question number 7.